Bienvenidos a un nuevo episodio de BlockCode Series, donde verás entrevistas con especialistas sobre temas especializados. Hoy continuamos nuestra serie de cripto-economía hablando de minería con Leo Zhang, analista financiero y fundador de Anicca Research. Con Leo estaremos aprendiendo sobre los factores principales que componen la minería de Bitcoin hoy en día y cómo se ve la evolución para este mercado tan importante dentro de Bitcoin. Antes de comenzar, les recuerdo suscribirse al canal, activar la campana de notificaciones y comenten qué otros temas y qué otros invitados les gustaría ver en el canal. Ahora sí, vamos a ver qué tiene Leo para contarnos sobre la minería de Bitcoin. So, hello, Leo. Thank you again so much for your time today.
Thanks for having me.
Excellent. Well, so we're talking with the base of a report, a very recent report that you wrote, where you define three structure issues of the Bitcoin mining industry. You have the emission schedule, the climate cycle, and the hardware iteration. First, you address the reduction of Bitcoins produced after each halving. So this is a key part of how Bitcoin works. But how could it be actually turned into a flaw?
So I don't think this is necessarily a flaw, and actually, I don't think any of these are a flaw. So when I the purpose of the goal of this research is that to establish some basic framework for the mining industry, because at this point, the mining industry, although it has been developed for over like roughly 10 years now, and it has gone through many different cycles and has grown into a billion-dollar industry with many highly specialized subverticals. The overall information barrier of mining industry is very strong. It's very opaque, right? We see a lot of very fragmented information here and there, and most of the information sources they come from Chinese media that are already too late by the time that they become an article or translated. So it's very difficult to get a good sense of what are the real information and what are the information that matters and what are some of the things that just insignificant and people tend to exaggerate, right? So, and obviously 3 variables are not enough to capture the entire mining industry, because every mining operation is very different and evolves constantly. And there are just a lot of variables that are impossible to quantify or even identify. But in an evolving industry, I think the best way that we can study it is by establishing some kind of immovable or constants that are relevant for this specific time period. So I think these 3 are the most dominating factors in the mining industry that we observe so far. Obviously, we can, by learning how these 3 work, we can establish a rough triangle of how the mining industry works and start to branch out and start to collect information that are relevant to each of these factors and see how the cause and effect build up from here. And back to your original question of emission schedule. So I think that's something that's very unique and very interesting to digital commodity such as Bitcoin. Because with physical commodities such as precious metal, oil, or coffee bean, the supply is also very critical. Well, actually, for physical commodities, its market is entirely determined by supply and demand dynamics. But the supply is there's also a lot of factors that go into its supply, its own emission schedule. But for a digital commodity, it's a little different, right? The emission schedule is mandated in the protocol, so it lends a certain amount of degree of certainty to how this is going to look like, at least for a period of time. And the industry can start just planning around it. And we have seen, mining industry has been anticipating this event for a very long time, even just months before the third halving took place. Many people are just offering their unsolicited opinions about what price is going to happen, what's going to happen to the industry afterwards. So I think it's more of a benchmark than a flaw. Yeah.
All right. Unsolicited opinions.
Yeah.
Do you mean in media? Do you mean professionals? Or you're just ranting outside of crypto Twitter?
Oh, I mean, I think nobody's really professional when it comes to this kind of things, and even it's just by unsolicited. I'm just saying that people are offering different opinions, and
Yeah.
but they're not really based on historical examples, because we only have 2 historical examples, very not enough data points to extrapolate what the likely outcome, right? So people are citing what happened to having in the past 2 halvings as an example of what's going to happen after the 3rd halving. But the reality is those are very different times back then. The first halving was barely noticed. Well, it did take a pretty significant impact on the global hash rate, but nobody cared about Bitcoin back then. It was such a small phenomenal, and the second halving was I think it was 2016, and the industrialized mining start to happen, and their ASICs start to show up on the market, and professionalized mining data centers are start to operate, but still at very relatively smaller scale. So we saw people who just switched to other networks, and but now people are expecting the same, but which is not really the case, because Bitcoin has established a lot more what's the right word, hardware loyalty. People purchase these hardware for
loyalty or dependency?
Dependency,
more,
loyalty. Yeah,
it is
yeah.
more like a dependency, right?
Because it's such a complex field. Its roots are in, obviously it's fundamentally driven by Bitcoin price. It's fundamentally driven by this greed for to win in this financial market. But unlike most of the other aspects of Bitcoin, it has its roots in hardware. And you have to understand how a basic idea of how the supply chain works. You have to source for cheap energy. You have to build an actual physical operation that can go wrong in so many predictable and unpredictable ways. So it's where the financial market, where information starts to bleed into physical world and bleeds into consumer hardware and energy market. That's when it becomes so tricky to manage, and just require different dimensional expertise to rub it all together, which is hard.
You also say in your report that hash power, for those who doesn't know, which is the power that a hardware, your computer, for example, has to use to run and solve different hashing algorithms for mining. It's a new asset class. Why is hash power a new asset class?
So, so this is actually how do I phrase it? This is a relatively newer idea, because Bitcoin itself Bitcoin itself being established as an asset class is still a recent phenomenon. So hash power, it's a very special thing, because it's the foundation of Bitcoin, right? Bitcoin is some people would disagree with this terminology, the way of phrasing, but it's produced by hash power. It's supported by hash power. But at the same time, this very specific type of hash power would have no value if it's not because of Bitcoin, right? So it's kind of it has a circular relationship. But hash power itself it produces Bitcoin, but at the same time, it's a financial instrument that represents a sequence of payout of Bitcoin, and you purchase this with fiat. So in a sense, it's a very special way of buying Bitcoin that's produced in the future. But with uncertainty. The uncertainty is how much Bitcoin that you're going to receive and how long you're going to receive those Bitcoin for. and also just not to mention, what the value of your Bitcoin in the future, and your ability to actually run these machines, right? So I think it's a very special type of financial instrument for Bitcoin, on Bitcoin. So unlike Bitcoin itself, it has physical roots. It has actual calculatable cost of production that's driven, as a result of producing these machines and burning electricity.
So it's like investing in the effort of mining Bitcoin in the future, just that you don't know, you know how much your effort cost, but you don't know how much it's going to cost by the time it's actually having an impact.
Well, it's more like you know how much it's going to cost, or hopefully you know how much it's going to cost, because you know upfront cost of buying the machines, and you know how much you're paying roughly for your electricity every month, and you know roughly how much you're paying for labor and maintenance. So you have a good sense of the range, or at least that's hopefully the case. What you don't know is how much you're going to receive. Because how much Bitcoin you're going to receive depends on how global hash rate is going to change for the duration of mining, how much fee is going to change, and obviously Bitcoin price is fluctuating as well. So, however, the difference with Bitcoin is that when you contribute hash power, you're augmenting the security of Bitcoin. You're like helping it get better.
All right.
Obviously, it's a very rough way of describing it, but that's the difference.
Another point that you made in the report is actually something interesting that a lot of Bitcoin detractors have used. That is the climate impact of mining, the climate cycle. How does this phenomenon works, and which will be the outcome of this in the future?
Yeah, so this is an example of what I mentioned earlier. This is an important variable, but for only this period of time. And the reason is because roughly estimated over 65% of the global hash rate is situated in China, in a very specific region in China. These regions, they have they have the similar climate pattern. So between May to November is considered the rainy season of these regions. So during this period of time, there's ample of flood, right? There's a lot of hydroelectricity, and so miners can get electricity very, very cheaply. So over the years, miners learned to take advantage of that phenomenon and start to a lot more facilities are built to service miners just for those months during a year. And manufacturers, they release new machines. They advertise their new machines right before the beginning of these flood seasons. And miners start to plan things around this schedule, try to sign deals before April comes. So it has become like a established seasonality, like like agriculture, like many things. It start to show behavior pattern that's rooted around seasons. But what it really is just the provision of cheap electricity during a period of time. So what we see is it's not uncommon for miners who are originally in other parts of China migrate to these regions before April to just take advantage of that. And around end of November, they either sell their machines, they've made enough money, and the machines are fully depreciated or close to being fully depreciated, or they just move back to north where they had their machines in the first place. So, and as for what's the future outcome of this, I think this will continue to be a very significant pattern in mining industry unless other regions start to develop, so other regions become more friendly to cryptocurrency mining, And we're seeing, more mining activities start to, at least people are showing interest in North America. But the problem is getting machines to North America is much more expensive than just shipping the machines from Shenzhen, China to Sichuan, China. And not to mention the labor cost is very different, and
Electricity costs. Yeah.
Actually, U.S. has very good, at least from the few people I've talked to, seems like there are definitely good, strong sources of cheap electricity. So which is a very good foundation. I think it will take some time for mining practice to build here, but I see it as an inevitable trend. So if one day, let's say, there's 25% of the global hash rate in China, 25% of global hash rate in US, rest 50% scatter everywhere, then this climate pattern the article that I wrote will become obsolete.
Hopefully.
Hopefully, yeah. I think it'll be good, because the problem with the current just geographical concentration of hash rate, it makes the flow of coin very, what's the best word to describe it? It makes the stream of Bitcoin from production to flowing to OTC to exchange not necessarily controlled, but controlled by same group of people. But obviously within this group of people, there's very fierce competition on which exchange is winning, which OTC desk is winning, which miner is winning. But a direct outcome is that the information is pretty much captured within this sphere. And that's why there's so little, so in comparison, so few English language articles or reports that's high quality.
But are there other zones other than China that are competing to also have maybe the same amount of activity?
So like I mentioned, US is definitely rising. There's definitely interest growing, but just the hardware issue is a little bit harder to solve. It's definitely a challenging issue because these machines are still manufactured in China, but now given the US-China relation, there's a 27.5% import tax on Chinese semiconductor goods. So when U.S. customers purchase machines, their cost is automatically 27.5% higher, and not to mention labor costs and maintenance are going to be issue as well. So despite that, there's very ample cheap source of cheap electricity here, and there's plenty of interest in Bitcoin and desire to build Bitcoin infrastructures. So mining, I think, is one thing that's going to take a little bit of time before we can see it really thrive in United States. So other regions, Russia is becoming a strong contender. Well, not contender. Contender is a little far. It's rising. The hash rate share in Russia's rising. Some region in Central Asia, some region in the Middle East. But the problem is always how stable are these mining operations. Yeah, that's the big thing.
Well, moving on. Well, you also mentioned, of course, centralization, and this is one of the inevitable, if not outcomes, is the reality of Bitcoin mining today, as you well said. So the difficulty for mining increments, more individuals have to quit the race in front of corporations and institutions that have way more power and equipment, of course. How does this model plays out in the long run for the mining market?
Yeah, so well, this is definitely an observation that people had for a long time, and it doesn't seem like this trend is reversing anytime soon. So there are a few reasons that this is happening. One, Bitcoin, the mining game is, as Bitcoin become more mainstream, become more, the stake become higher, the competition on acquiring hash rate becomes more fierce. People are willing to pay more for these machines, just over long-term trend. And these machines are becoming more and more advanced. As these machines become more and more advanced, they also become more expensive to create. So so that's the most primary reason that this is happening, that it's becoming more expensive. And two, given your earning is roughly determined by your the percentage of the hash rate you own as the percentage of the global hash rate, right? So as the base grows much larger, that means to have decent earning, your own, you have to purchase a lot of machines as well. And by simply purchasing a lot of machines is not enough. You also have to pay electricity. You have to every month to feed them. This becomes very expensive to manage. So if you have a one bad month that the coins that you mine has less value than your electricity expense plus depreciation, then it becomes, you have to think about, okay, should I turn them off or not? So we have gone through many different small cycles like this for many people at different scales. Not just small miners experience this. Large mining operations have failed many times in the past as well. There are quite a few examples of that. I think at the end of the day, it's just there's so much uncertainty when it comes to how much you're receiving. So it's very difficult to plan ahead. What's the best way to manage risk, and what's the proper strategy for thinking about your cash flow. But I do think the industry overall is getting better, is getting more savvy, and getting more well-equipped with financial instruments that can partially mitigate the risk, or at least just to make the situation a little bit easier. So, but to answer your question, it is definitely getting more professionalized. It is getting more, it's moving away from, everyday people mining in their garage very fast. But I think this is just an unfortunate consequence of something becoming so rich in profit, and having a centralized effort does make it much easier to manage in a mining operation. And as for future, I think it will just get worse, right? It will get more industrialized. I think we'll see multi-million or possibly billion-dollar mining operations set up, and governed by very people with 20-30 years of experiences, and these companies might even go public. We have seen mining companies come public, but they're terrible. But it will just become much more professionalized. And the big question is obviously, okay, what about the governance, right? What if our miners are we just simply creating something that corporates win again, the shareholder class win again? So I feel I'm not entirely sure about this, right? I think from an operation perspective, it's obvious that it's going to become further industrialized. And I think right now, selling a product that tells you, oh, you're going to continue to mine at home with the machines that are produced with your 12 cent per kilowatt hour electricity, that's lying. That's lying to customers. That's just scam, or just very naive. But I think decentralization can happen. Like what really determines decentralization in the mining process, I think, is the right to vote on which block to propagate. And right now, this process, miner has delegated this decision to mining pools. So when we talk about mining centralization, I think a lot of people are just not really sure like which part of the stack we're really talking about. I think it's okay that just two companies are making all the hardware. It doesn't matter, because if the people who buy these hardwares are scattered everywhere, are different groups of people, then the ownership of mining hash rate is still very diversified.
Diversified is not decentralized, because we can agree perhaps that most people that start into mining, they are still in their houses. So how would you say that individuals can actually benefit of the mining today and moving forward? How can they take an advantage?
Yeah, so I have a few different thoughts on this. One, I think the most extreme and to be frank, the most likely scenario is just that mining is just completely moving away from individuals, and everything that individual does is just going to be on top of this settlement system, right? People, there's still going to be a lot of room to play as individuals, as developers on Lightning Network, or just build digitally native commercial applications on top of Bitcoin. And what happens underneath it is just allocated to these individual corporations or larger operations. Given the information that we have right now, it seems like this is moving towards that general direction. I don't want to be pessimistic, but that's just how history works. This is how power hierarchies always performed in the past. But a few ways that I think this can be mitigated, well, not necessarily mitigated, but to some extent more open to general individuals. One, an obvious way is that there is financial products that allow, even though these machines are physically running in certain locations, but the ownership of these hash rate is being virtualized and being traded and can be purchased by individuals. Obviously, there's a market mechanism that needs to be established, and there were many steps away from having that. But but imagine just ignore the middle steps, but imagine that these machines are operated by very capable people at very professional data center people in places with stable provision of cheap electricity, but the return of the hash rate is being sold and determined by whoever wants to purchase it. And there's a market mechanism on, okay, what's the value, what's the current trading price of 1 unit of hash? So that it's a possible way I can totally see this happening, because financialization is also an inevitable path for commodity, and digital commodity will not escape this fate as well. The question is obviously how long is it going to take for us to reach that, and also how real is the ownership transfer is, because if individuals, it's not that hard for individuals just to purchase the outcome produced by the hash rate, just receive the coins. But if the individual wants to vote, this is not the chain I want to propagate on, that's the chain, then it becomes a much harder issue and require a change to the mining pool protocol.
But I think that maybe you were referring, I didn't thought of it, but you are right. There's already a business model for saying some way that is like the hotels for miners.
Yeah, there's some nuances to that. The existing format is, obviously cloud mining, right? Cloud mining platforms. But the problem is, there are many flaws to this business model. It's not efficient for the platforms. The cloud mining platforms is not efficient. It's not good for the clients. When the market turns very quickly, they get locked into this very long period of time, and they most likely overpay. And it's not necessarily good for miners who rent their hash rate to the cloud mining platform. So there needs to be much more dynamic market mechanism that help us understand, okay, what is the efficient pricing of these kind of virtualized contract? And a second way of doing this is obviously using a more traditional capital market approach by listing the mining operation as a public company, and people can buy its share and vote on how you want to change the operations. Or a slightly more science fiction way of doing it is to structure the mining operation, ownership of the mining operation as a DAO, decentralized autonomous organization, where there's some kind of mechanism that owners of these mining operations can continue to participate in the decision-making process, and decide how it should be distributed, how it should be governed, and how it should be operated on the ground. DAOs are DAOs are inevitable, and I think DAOs and cryptocurrency are natural coupled together. And I think for a real DAO-based business to happen, I think mining or staking-based business are the most intuitive and the actual closest thing to a real cryptocurrency native business.
Leo, before we jump into the last question, this has been an amazing conversation. Since we were talking about, of course, centralization and how can individuals can get ahead, there's this thing, node operations. This is not something new. It was already mentioned back in 2018, how node operations were like this brand new business model in mining. How does this actually works? Because we were talking about this is a rather proof of stake, and if this is profitable for people who are independent from organizations and companies that want to mine or are already mining.
Yeah, so proof of stake. Okay, so proof of stake. One, it's the most to describe it properly. I think it's the most extreme form of virtualized hash rate or the blockchain propagation decision-making process. So it has changed its source of this random number generator from just burning electricity, from burning real energy to from within the protocol itself. So a lot of the hardcore proof of work people think that because the external source of random number generator has been cut off and moved to within the protocol itself, it's subject to a lot more different types of vulnerabilities, such as if the protocol is simply ill-designed and can be taken advantage of. And there's a slightly more philosophical question of whether this kind of self-referential scaffolding can hold in the first place at all without external source of energy to support its growth. So I'm rather open-minded on that. I think there's a lot more digital architecture that are complex and we don't fully understand yet. And I think proof of stake is one of them. At this point, I have not seen any proof of stake projects that I'm very impressed. There are tons of very smart people that are working on proof of stake and who are fully convinced that proof of stake may work one day. I don't want to say it will never work, but I want to be a little bit skeptical until I'm proven wrong. But the general idea is just to replace the massive electricity burning capital expenditure of buying machines and change that to instead of doing that, you show up with a bunch of coins and you stake it, you lock it in for a period of time. And this time that the coins is illiquid, become immovable, you're trading off the capital expenditure with capital inefficiency. So it's different way. It's different way to decide, okay, how the cryptocurrency project is going to grow. So I think when it comes to the question of profitability, when it comes to arbitrage opportunities, I think it's a very different set of analysis than understanding the protocol itself. It has much more to do with the market dynamic, who are the main players, who are the whales, and what are the invisible rules that's within this community. I think those are much more useful analysis when it comes to understanding of profit opportunities than whether something like this fundamentally work or not. But it does seem like it has a lower barriers of entry compared to mining Bitcoin. But if a proof of stake project is ever to grow to the same kind of magnitude as Bitcoin, popularity as Bitcoin, market cap of Bitcoin, and it has a similar type of supply schedule of a hard, 21 million coins, it's foreseeable that even that proof of stake is going to be run by large corporations that specialize in that.
Last question. What's your assessment of Bitcoin as a whole, in 2020 so far? And you said in the report that right now the mining industry is at crossroads. Which are the possible outcomes for the industry and which it seems to be the most possible?
Okay, so I'll just start with the last question first.
Mm-hmm.
By crossroad, it's more related to how mining operations should be run. And it's more has to do with the change of strategy and mindsets and the use of the suite of tools for existing market participants. So there are a whole generation of miners who started before 2018 who are experts at finding cheap electricity, who are very good at understanding what's the right way to set up these hardware. And all they had to do was to make sure that their expenses are as low as possible. They sell just enough to cover their expenses and just everything else sit along. But now this game has profoundly changed with having kicked in, the competition intensified, and also just more players making more complex, introduces more variables. So I think the strategy needs to be changed. The type of tools that people were not using need to be used. A new type of tools may be developed to better, introduce certainty in otherwise very uncertain game. So I think new generation of miners need to be more finance oriented. They need to understand, okay, there's a serious consequence of ignoring cash flow management. There's serious consequence to not fully understand what kind of risk I'm dealing with. So overall, I think mining needs to move from these very fragmented individual operations that are just very unprofessional to having a much more holistic heuristic. And then your question on my view on Bitcoin, I think Bitcoin is much, much stronger than before, and is continuing to become stronger. And the strongness doesn't necessarily fully reflect in price, and at least not right away. I think there are definitely more high-profile people, whether it's traditional investors or tech people, or just some politicians even, or some certain local governments, are starting to understand, okay, what Bitcoin is and what this technology can do for them, and start to have more open-minded approach to its infrastructure, or just to its general acceptance. It's becoming more mainstream. It's becoming more. It appears more on televisions, movies, and it's discussed more. People no longer become very confused when people mention Bitcoin. But obviously, it's still very far away from being on the same kind of level of comfort as gold or other type of commodity or other type of currencies. But just given that it only being around for 10 years, I think it has done remarkable progress. And on the development side, I think we're seeing more talented people leaving their old jobs to join the system. And I think how messed up the macro scenarios are also ushering people towards a more neutral, less human-interfered system. Obviously, I think it's very difficult for Bitcoin to say, okay, this is an alternative, a replacement of all the empire expansion games that humans been playing for the past since existence. But it does give some people hope, and it does represent like a solution that get people excited about. So whether it's mining or Bitcoin infrastructure, or make it easier to trade, or just Lightning Network, I think it's getting stronger.
All right. Well, Thank you so much for this conversation, Leo.
For having me.
A pleasure.